Welcome everyone. It is Monday, February 4th. Welcome to the Grinder.
Into the grinder.
Alright, Dividend Grinder here. We're coming at you looking at the portfolio right away. 18,100. It is past 18,000 now. It has been on fire. Gladstone Commercial Corp has been on an absolute tear on really no news. They have sold some of their non-core positions, but I don't know why that would be influencing the stock price so much. There has been pretty low volume, so it's just been steadily going up and up, and it's above $20. If we click on it real quick, look at that. My average share price of $18.71. It's at $20.21. Now, in prior videos past, I've hinted at the fact that if it went above 20, I would consider selling it all. But I think I'm just going to hold. It's such a huge position at 692 shares. I have no reason to really sell it. It's been doing nothing but treating me well. I've gotten such good dividend returns out of it. You can see it's at a 7.5% yield. And Gladstone has just been treating me well. If we go to holdings for the true percentages, 8% gain over $1,000 from Gladstone Commercial Corp. And the portfolio overall down there, 6.33% in the green. So let's get into today's video topic. So early today, actually, it was in the afternoon. I should have made it earlier in the day or even like over the weekend. I asked, do you believe portfolio diversification is necessary? And the poll is actually closer than I thought it would be. I think like 24 people voted, and it's 62% saying you need diversification versus 38% saying you do not need diversification. Honestly, I was expecting like an 85 to 15% saying you need diversification. Pretty much, here's my mentality when it comes to talking to people about this. I find that the people that are so for diversification, they don't see any other way. They say you need it. They are very stubborn. They're very closed-minded. If you talk to the people that say you don't need diversification, they tend to be a lot more open-minded. They don't mind diversification, but they obviously are fine without diversifying. They're fine with doing research on individual stocks, and that's the camp that I'm in. So in this video, I just want to discuss a little bit about it, and I'll get you some holdings in the background. Let's go to the portfolio. And let's go to the monthly mania pie just so you can see all the nice colors on the wheel while I do my talking. And you can listen to the background music in the meantime. But let's talk about diversification. So obviously, the reason to diversify is to make yourself way less risk averse. So if you have a bunch of holdings or you have an index fund that comprises of, let's say 500 different holdings, it's just a weighted average, then obviously if one of the companies has a really bad time, maybe they go under, maybe they have something like the Pacific utility company had with the fires and they just tank out of nowhere. If you have such a well-diverse portfolio, then you're not going to have to worry about things like that because it's just going to be just a little smudge on your entire portfolio, which you could easily make up since you have so many other holdings that are capturing the market overall. Now look, here's the arguments against diversifications, and since I'm in that kind of camp, I figured I'd go more heavily on this one. So if you are diversifying, you tend to need a lot of capital. So let's look at the monthly mania pie that we're looking at right now. So it's 40 slices, and I have over $4,000 in there right now. And I still, if we go to the holdings tab, I don't have full shares of anything yet. And this is just a 40 share portfolio, and there's over $4,000. Now, depends who you're talking to. 4,000 is either very tiny or it's a lot of money. But $4,000 and you don't even have full shares. Obviously, the weighted average is a little bit different in this pie, but so would any portfolio. You're not going to put all your eggs in the top half of one basket. So you need a lot of capital for it to really sustain. And a lot of people don't have that capital. So what do? So they'll just buy a Vanguard S&P 500 ETF, something like SPHD, which is just a high dividend, low volatility fund. That's a fund that I really like. But here's the problem with that. And right there you can see SPHD, the high dividend, low volatility fund. But the problem with that is it's impossible to get quote unquote aggressive with it. So you're going to get that 4% dividend yield, and due to the low volatility, you're not going to get that much capital appreciation. Now, you won't lose it as much as other ones, but you won't gain anything. So if you really want those high yields, if you really want that high return on capital appreciation, it's really difficult to do if you're over diverse. If you have all these, ETFs in your account, or if you buy like 100 to 200 shares on M1 Finance, something like that, then it's really going to be difficult to beat the market, as they would say. Now, a lot of people aren't interested in that, and I get that. A lot of people just don't want the risk, so they'll put in the ETF. They don't want to worry about it. They'll put it in something like SPHD here, and they just say, hey, I'm completely fine with 4% a year. I just want my money safe while getting some return, better than a money market or better than just leaving it in my account. And hey, that's fine. If that's your investing style, there's nothing wrong with it. Don't take this video as me bashing diversification. It's not a bad thing. It's not inherently bad. I just get, a little irked when they say like that's the only way to do it. And you see the whole name to my portfolio is aggressive dividends, and I'm not going to get aggressive unless I do individual holdings rather than just diversifying multiple times or putting it into just ETFs. So I'm going to get that aggressive yield thanks to my abnormally large holding in Gladstone Commercial Corp. That's 77% of my portfolio currently. And a lot of people would say you have too much in Gladstone. The pure diversification peoples, you have too much in Gladstone. And I say, look, it's just my style. I'm going to get a better return. It's a company that I researched, and it's a company that I believe in, can sustain their dividends every single month for years to come. I see no issues with holding it and making it such a big priority in my portfolio. Now, a lot of diversification people would have issues with that. A lot of them are beginners, which I am completely fine with them buying an ETF. Don't get me wrong. There's nothing wrong with beginners putting it in a nice, safe, simple fund. They don't have to understand it. But a lot of them don't know how to fully dive into the fundamentals of a company and sustain knowledge on whether a company is going to last long term or not. So they really don't have anything to back up any individual holdings that they would buy. I have plenty of backup that I could put on Gladstone Commercial Corp. A lot of people think that I don't have too much of an education, but if you ask me anything on Gladstone Commercial Corp, I guarantee I can answer it. Their funds from operations are razor thin versus what their distributions are. However, they do have a surplus. They're more than capable of paying it. There's no risk of it cutting, at least not in the near future anyway. Their net lease properties, it allows them to not have to worry about any construction or repair. Anyway, the point I'm saying is if you're very good with research, then there's nothing wrong with picking individual holdings over diversification. Just think about Warren Buffett for a second. Does he really diversify? Now, he has multiple holdings, but do you consider that diversification? Because at the end of the day, he's picking individual stocks. He's not picking a large fund. He doesn't have over 100 holdings, and if he does, well, he has the capital where he could pull that off. But what I'm saying is, would you consider a portfolio like PPC Ian, who has about like 38 to 40 stocks, but they're all individual holdings. None of them are ETFs or anything. So do you consider that diversified? I mean, you need a lot of capital to get any of the dividend gains going. Even if you are dripping right back into that one holding, you need a lot of capital for it to really take off. And if one of those goes down, 1 out of 40, you could argue that is going to leave a little bit of a mark. That's 2.5%-ish. Is that diversified? Do you consider that diversified? It also depends how you weight your holdings, because if something like for me, Gladstone, 77%, if that went down, I have 41 holdings in my portfolio. So it depends on the weight. It depends what you consider diversification, so on and so forth. And let's not forget, if you're holding long term, like I'm holding Gladstone long term, I've gotten so many dividend payments from that makes it risk averse. If you're confident that the holding that you have, a lot of your eggs in that basket, if you're confident that the appreciation is not going to go very down, the stock price isn't going to tank anytime soon, then if you're holding it long term, that's your risk aversion. Also, dollar cost averaging So if you're dollar cost averaging, not only are you getting those dividend payments that are just making up for any risk that, you know, a fall in capital price could have, but when you're dollar cost averaging, sorry for like the weird stutter that when I transitioned to dollar cost averaging, I was looking down at my list. But if you're dollar cost averaging, obviously you're getting lower price, you're more of a value investor, and that's going to make you risk averse as well. So you're going to, you know, buy it at its lower points. Once you study individual holdings and you realize, you know, where are resistance points, where are support points, you know, do they have struggles breaking through like the $20 mark like Gladstone usually does? Do they usually bounce back when they hit 17 when Gladstone commercial, you know, it's a very common trait of them over their lifespan. You just have to be aware of things like that. And if you are, then there's plenty of good reason to value individual stocks more than diversification. I mean, I would assume most people who watch my channel would also watch Dr. Dividend. And look at his portfolio. I mean, you could consider it way diverse. There's a lot of diversification. He has a ton of holdings, but at the same time, a large majority, I think like 80% of his holdings are 5 shares or less, while he has a boatload, like 50K worth in Ford and Portola Pharmaceuticals, which I have no God's reason why you would ever hold that long term, but that's just my opinion. But do you consider that diversification because he has so many holdings, or do you consider that, you know, pretty risky because he's putting a lot of his eggs in Portola and Ford, and now his newly established options in AT&T? So do you consider that diverse because he has so many holdings, but it's really weighted towards, you know, 10 to 20 holdings out of his 100 or 200 or so, I forget how many he has in his portfolio. So just a little, you know, rant on diversification. Of course, I'm not against it. There's nothing inherently wrong with diversification, but just realize if you want to get aggressive, it's virtually impossible to beat the market if you are literally just betting the market. You know, betting the whole hit and caboodle, as you want to say. You can't physically beat the market. However, if you're fine with just modest gains and you want less risk, go ahead, diversify. There's nothing wrong with it. This has been the Dividend Grinder. I hope you enjoyed this video. Leave your thoughts and comments down below on diversification. I feel like my audience, although it is leaning more towards diversification, I feel like we have a lot of open-minded investors on this channel, and that's what I like. I like engaging in conversations. Obviously, with diversification, I'm open-minded because I went from 2 to 41 because I realized that having 2 holdings isn't exactly ideal. When I had Gladstone and AT&T, boy, did the diversification army hit me hard on that one. But I would agree with that. Like, even though I was confident in Gladstone and AT&T, I wanted to diversify myself. So this has been the Dividend Grinder. I will see you guys and gals in the next video.